Hey everyone, welcome back to Corporate Decoder, the place where we decode all the corporate mumbo jumbo. Today we're diving into an 8K filing. What's an 8K, you ask? Think of it as a company shouting, hey, something important just happened. And in this case, it's about a reverse stock split. But don't worry, we'll explain what that is without the confusing words. We are looking at a report from CNS Pharmaceuticals, and the big news is that they're doing something called a reverse stock split. Now, that might sound scary, but let's break it down. Let's scroll date of report, date of earliest event reported, February 19th, 2025. Sit scroll. This report is dated February 19th, 2025, so this is pretty fresh information. The key part of this report is about what they call material modifications of rights of security holders. In plain English, this means changes that affect what you own as a shareholder. The company had a meeting with the people who own stocks in CNS Pharmaceuticals, the stockholders, back in November of 2024. At that meeting, the stockholders said it was okay to do something later. This scroll affect the reverse stock split at a ratio in the range of 1:2 to 1:50 SIP scroll. They gave the company's leaders, its board of directors, permission to do something called a reverse stock split. They said that the company could choose a ratio between 1:2 and 1:50. What does that even mean? Well, it means that the company would be able to group a bunch of smaller stock shares into a fewer number of bigger shares. So depending on the ratio chosen by the company's board of directors could group 2 to 50 smaller shares of stock into a single share of stock. The stockholders trusted the company's leaders to pick that ratio. The scroll approved a 1:50, 1:50 reverse stock split, the scroll. Now, it seems that they decided to move forward with a 1:50 reverse stock split. Think of it like this: if you had 50 pieces of candy, the company is turning that into one super candy. You still have the same value, but it's in a bigger single piece. This happened in February 2025. The scroll, every 50 shares of the company's issued and outstanding common stock will automatically be combined into one cert scroll. So every 50 shares of the company's stock that existed automatically became one share of stock. The price of that single share, however, becomes 50 times higher. So if you previously held 50 shares that cost $1 each, you now hold one share that costs $50. It's not magic, it's just a way for the company to change how its stock is structured. The par value, which is like the stated worth of the stock, stayed the same at a really small amount, $0.001. The scroll reduced from approximately 136.93 million shares as of February 20th, 2025 to approximately 2.74 million shares. The scroll, before the split, there were about 136.93 million shares. After, there were about 2.74 million. The total number of stocks decreased a lot, but the total amount of authorized stocks stayed the same. This reverse stock split also affects things like stock options, restricted stock unit awards, and warrants. Those will be adjusted too to keep everything fair. The scroll, no fractional shares will be issued as a result of the reverse stock split, the scroll. You can't have a fraction of a share. So what happens if someone ends up with, say, half a share after the split? The company will just give them cash for that little bit. The amount of cash is based on the stock price on the day the split happened. The stock started trading with the new split numbers on the Nasdaq Capital Market in February 2025. The stock symbol, the letters used to identify the company, stayed the same at CNSP. The company announced the reverse stock split to the public through a press release. Now, the company provided information on how the reverse stock split impacts their numbers. Let's check out their net loss per share for 2023. Before the split, it's about $250, and after the split, it's over $12,500. This huge difference reflects the change in the number of outstanding shares. Same thing with the loss per share in 2022. The loss increases drastically from $560 to over $28,000. After the reverse stock split is accounted for, the company also breaks down the numbers for 3-month periods. For the 3 months ending in March 2024, the company's losses increased greatly from about $20 per share before the split to over $1,000 after the split. Similarly, the 2023 results increased from a loss of $129 to over $6,400 after the split. The 6-month results for 2024 increased from about a $22 loss per share to over $1,100 after the reverse stock split is taken into consideration. The 2023 6-month period increases from a $154 loss to over $7,700 loss. Lastly, let's look at the numbers for the 9 months ending in September 2024 and 2023. The losses per share increased from just about $1 to $77 in 2024 and increased from $202 to over $10,000 in 2023. So what does all this mean? CNS Pharmaceuticals is a company that has decided to do a reverse stock split. Companies typically do a reverse stock split when their stock price is low. It doesn't magically make the company better, but it can make the stock price look more attractive and potentially avoid being removed from exchanges like the Nasdaq. They are hoping that making their stock price higher will increase investor confidence in the company. On the surface, this looks like a weak company that's struggling and whose investors aren't confident in its survival. But looking past that initial feeling, there are some important upsides that we should consider. The company is trying to increase the value of its stock, and that is a good sign. In addition, all of the factors surrounding stock options and the like are adjusted. This suggests a stock price in the range of $1.50 to $2.50. With that target in mind, I'm giving the stock a slightly bullish rating, as it seems that the company has a direction in mind and is making positive changes towards their goals. If you found this helpful, please subscribe to Corporate Decoder.